Welcome to the deep dive. We've got quite the stack of reports about Ircon International Ltd.
Oh yeah, a whole mountain of info.
for their Q2 FY25 performance.
Mm.
They're a big player in the Indian infrastructure scene, specifically when it comes to railways. So let's jump right in and see what we can learn from all these numbers, shall we?
Sounds good to me.
Just a quick reminder for our listeners: Ircon is a public sector undertaking, so heavily involved in those big rail projects that are really building up India's network. But they also dabble in some highways and a few other projects as well. So to really get our heads around all of this, what kind of sources are we working with here?
Well, we've got the financial statements, obviously, investor presentations. We even got our hands on the auditor's report.
Wow. Okay. So like a real 360-degree view of what's going on with Ircon.
Exactly.
Okay. Well, let's start with the big picture. How did Ircon actually perform this quarter? What are the headline figures telling us?
All right, well, their operating revenue for Q2 FY25 came in at about 2,448 crore rupees.
Okay. So is that good? Is that bad?
Well, it's actually a 19% dip compared to Q2 of last year.
Oh, okay. So not so great.
But hold on. There's more to the story. It's actually a 7% jump from the previous quarter.
Okay, so a bit of a mixed bag then. Revenue's down year on year, but it seems like things might be picking up steam a bit recently.
Yeah, you could say that.
Okay, so what about their profitability? I mean, that's what really matters at the end of the day, right?
Absolutely. Let's look at EBITDA, earnings before interest, taxes, depreciation, and amortization.
Right.
It's a key measure of how efficiently a company is generating profit from its core operations.
Right.
So Ircon's consolidated EBITDA for Q2 FY25 was 252 crore rupees.
Okay, and how does that compare?
Again, down 13% year on year, but up 3% compared to the last quarter.
Okay, so we're kind of seeing a similar trend here, a dip compared to last year, but maybe some positive signs recently.
Yeah, that's a fair assessment.
Okay, well, what about the bottom line? How much money did they actually make? What was their profit after tax?
They landed at 206 crore rupees for Q2 FY25.
Okay, so an 18% drop
Mhm.
year on year,
Mhm.
but, keeping with the theme, an 8% increase from the previous quarter.
Exactly.
Okay, so the story's fairly consistent across the board, but before we get too deep into this, can you just break down for us, standalone versus consolidated results for those of us who don't live and breathe balance sheets every day?
Sure. So consolidated figures, those include Ircon's subsidiaries, all the different companies they own.
Right.
While standalone numbers just focus on the parent company itself.
Okay, so it's like separating the mothership from the fleet.
That's one way to put it, and it helps us really pinpoint where the growth, or in this case, maybe the challenges, are coming from.
Right. So are the standalone results telling us a different story?
Not entirely. They kind of echo a similar trend, but maybe with a slightly more optimistic take on revenue. Standalone operating revenue hit about 2,299 crore rupees for Q2 FY25.
All right, and that's
Down 20% year on year, but up 5% from the last quarter.
interesting. So standalone revenue actually fared a little bit better than consolidated revenue. What about standalone EBITDA and profit after tax? Any surprises there?
Well, standalone EBITDA for the quarter was 105 crore rupees, a pretty substantial 39% drop year on year.
Oh, okay.
Profit after tax landed at 202 crore rupees, down 12% year on year. But here's something a little curious. The standalone core EBITDA margin is actually higher than the consolidated one.
Oh, that's a little twist.
Yeah. And it suggests that Ircon's core operations, when you look at them just by themselves, are actually managing profitability better than when you factor in all those subsidiaries.
That's interesting. Almost like a hidden clue or something. Okay, well, let's zoom in a little bit. Where exactly is Ircon generating all this revenue? What are they actually doing?
Yeah, so if we look at the segment breakdown, the bulk of Ircon's revenue, about 90% is coming from domestic projects, primarily in railways and highways. Railways, no surprise there, takes the biggest chunk.
Makes sense. They're the railway people, right?
Exactly. There's also a smaller other segment, but these sources don't really go into detail about what that includes.
Okay, so they're really rooted in their home market. You mentioned international projects earlier, though. What's the story there?
Yeah, international projects are a smaller slice of their overall pie, but they're showing really impressive growth.
Growth is always good to hear about.
Right.
Do we know where they're making these international moves?
They've actually established branches in maybe some places you wouldn't expect.
Oh, okay, like where?
South Africa, Malaysia, and Sri Lanka.
Oh, wow. Okay, so they're really branching out, huh?
Yeah, seems like they're targeting markets where there's a real need for infrastructure development and where they can bring, their expertise to the table.
Makes sense. Okay, so international expansion check. But we've also seen some profitability challenges. Can we dig into that a bit? What factors are contributing to these dips in profitability?
Sure. So one key factor is their operating expenses.
Yeah.
Even though their overall expenses are down year on year,
Right?
probably reflecting, that lower revenue we talked about.
Right.
We need to look closely at whether there are specific cost increases happening within, different parts of their business. Like, were there project delays that drove up costs? Did material costs increase significantly? Was there maybe an increase in wages? These are all pieces of the profitability puzzle.
Yeah, that makes sense. What other expense-related areas should we be, paying attention to?
Finance costs are another important piece of the puzzle.
Right.
And the reports show that those costs have actually risen year on year, probably because of higher interest rates.
Right. Rising interest rates, definitely a hot topic these days.
Yeah, to really understand the full impact, we need to look at their debt structure and see how vulnerable they are to those interest rate fluctuations. Any big shifts in their borrowing patterns, that would be worth noting too.
Okay, so finance costs.
I-
Got it. You also mentioned depreciation earlier. Anything interesting happening there?
Yeah, so depreciation charges, those basically reflect the wear and tear on their assets over time.
Right. Right.
So it's worth checking if they've made any big asset purchases or sales during this period
Okay.
that might be, affecting those charges. For example, if they bought a bunch of new equipment or sold off some older assets, that could significantly shift those depreciation numbers.
So it's like even their stuff getting older is costing them money.
In a way, yeah.
Okay, so we've got operating expenses, finance costs, and depreciation, all potentially impacting Ircon's profitability. Before we move on, you mentioned a significant drop in standalone core EBITDA margin year on year. What's the key takeaway there?
Well, what's interesting is that when you isolate Ircon's core operations, their profitability seems to be taking a hit. This could point to some internal challenges within the parent company itself, rather than issues stemming from their subsidiary.
So, like, problems at headquarters, not out in the field.
Potentially, yeah. It begs the question, what exactly is impacting profitability at the core of Ircon's operations?
That's a great point. It seems like there's more to this story than meets the eye. Now, let's shift gears a bit and talk about Ircon's future. What can you tell us about their order book and their potential for growth?
Well, one of the first things that jumps out is the sheer size of their order book.
Okay.
They have a massive amount of work lined up.
That's got to be a good sign, right?
Oh, it's a fantastic indicator of future revenue potential.
Yeah.
As of September 30, 2024, the order book stands at a whopping 24,253 crore rupees.
Whoa. Okay, that is a seriously impressive number.
Yeah.
Can you break that down for us a little bit? Like, what kinds of projects are we talking about here?
Absolutely. The order book is largely dominated by, you guessed it, railway projects, representing about 78% of the total.
Okay, so sticking to their roots.
Highway projects take up another 22%, with the remaining portion categorized as other, but unfortunately we don't have specifics on that. Geographically speaking, about 90% of these projects are domestic, with the remaining 10% coming from those international contracts we discussed.
Okay, so they're mainly focused on rail and road infrastructure within India, but with a little bit of international flavor sprinkled in. But here's what I find really interesting. More than half of this order book, about 52%, was secured through competitive bidding.
You're right to highlight that. A larger proportion of projects acquired through competitive bidding as opposed to direct nomination from the government. It's a very positive sign.
How so?
Well, it suggests a more open and potentially more profitable operating environment.
Okay, I see.
It means Ircon is proving their ability to win contracts based on merit and competitiveness rather than relying solely on government-allocated projects.
That's got to be a confidence booster for them.
Absolutely.
Okay, so that speaks volumes about their capabilities and their capacity to thrive in a more, I guess, market-driven environment.
Yeah, exactly.
But of course, no business is without its challenges. What hurdles might Ircon face as they look to the future?
Well, while the size of their order book is definitely promising,
Right.
the sources do kind of hint at some potential roadblocks.
Oh, okay, like what?
One key area to watch is project execution.
Okay.
Were there any mentions of project delays or cost overruns in the reports? Those factors can really impact profitability, even if the revenue stream is secured.
That makes sense.
Also, were there any regulatory hurdles or issues with land acquisition that could slow down project implementation? These are all factors that could present real challenges for Ircon.
Yeah, I mean, it's a tough business, right?
It is.
It's a real balancing act, isn't it? Managing this massive order book while making sure those projects are delivered on time and within budget. What about opportunities, though? Are there any new areas that they're exploring for growth?
Well, we've already talked about their push into those international markets,
Right.
which seems to be gaining momentum. But beyond, geographic expansion, are there any technological advancements they're leveraging? Are they embracing new construction methods, using digital tools to boost efficiency? Or maybe they're exploring partnerships or collaborations to tap into new areas of expertise.
Yeah, lots of possibilities.
There are.
One final detail that I noticed was the in-principle closure of IRSDC, the Indian Railway Station Development Corporation Limited.
Oh, right.
Yes. What implications does this have for Ircon?
Ah, yes, the IRSDC. This raises some interesting questions about how Ircon is adapting to the shifting landscape of the industry. It appears that IRSDC's business is being transferred to RLDA, another government entity.
Okay.
And this move could create, both challenges and opportunities for Ircon.
How so?
Well, on the one hand, they might lose out on some business opportunities that were previously channeled through IRSDC.
Right.
On the other hand, it might open up new avenues for them to work directly with RLDA,
Right.
or maybe even to take on projects that were previously under IRSDC's purview. It's a situation that definitely warrants close monitoring.
So we're looking at a company with a strong foundation in that traditional infrastructure space, but one that's navigating this changing landscape with new opportunities and potential disruptions as well. It's a fascinating case study. Now, before we wrap up this part of our deep dive, I'd love to get your expert take on a few things. First, how does Ircon's performance stack up against its competitors in the infrastructure sector? Are they leading the pack, lagging behind, or somewhere in between?
That's a great question. To really get an accurate comparison, we'd need to dive into their competitors' financials, order books, all those key performance indicators. Unfortunately, the sources we have for this deep dive don't really give us that comparative data. It's always important to look at, that broader industry context when you're assessing a company's performance.
Absolutely. Context is key.
Right.
What about the overall economic climate? How is that influencing Ircon's operations and the infrastructure sector as a whole?
Yeah, that's another really critical piece of the puzzle. While these reports don't specifically talk about, that macroeconomic environment,
Right.
we can't ignore the impact of things like inflation, interest rates, and government spending on infrastructure projects.
Like, those are big factors.
They are. Higher inflation, that can drive up the cost of materials, while rising interest rates can increase borrowing costs, both of which, can squeeze profitability. On the other hand, if the government is prioritizing infrastructure development, that can actually create more favorable conditions for companies like Ircon.
So there's this complex interplay of factors at play.
Oh, absolutely.
Okay, well, finally, from an investor's perspective, what are the key takeaways from Ircon's Q2 FY25 performance? What should potential investors be focusing on?
Yeah, connecting this to the big picture, there are a few key things to watch. First, that order book is undeniably strong.
Right.
That's a very positive sign for future revenue. However, investors really need to assess the quality of that order book.
Right.
Are these projects, are they in areas with stable regulatory environments?
Okay.
Are there clear land acquisition processes in place? Second, profitability is a concern.
Yeah.
Investors really need to understand what's driving that year-on-year decline in margins and whether the management team has a solid plan to address those challenges.
Yeah, those are all excellent points to consider. It seems like Ircon's story is one of both opportunity and caution.
I think that's a good way to put it.
We'll continue to explore some more of these specifics in the next part of our deep dive.
It's good.
But this has definitely given us a solid foundation to build on.
It really has. And keep in mind, we've only just begun to uncover the layers of this story. The real insights come from digging into the details and connecting the dots between the different pieces of information we've gathered.
Exactly. And we've got plenty more to uncover. So stay tuned for part 2 of our deep dive into Ircon International. Okay, so we're back and ready to really dig into some of these financial statements. One thing that's been on my mind is Ircon's debt situation. We
Mm.
talked about those, rising interest rates
Yeah.
and the potential impact on their finance costs. But what's the overall picture of their debt? How much are we talking about here?
Yeah, good question. So if we look at the balance sheet, as of September 30, 2024, Ircon has about 217 crore rupees in non-current lease liabilities
Okay.
on a standalone basis. That figure's a bit higher on a consolidated basis, coming in at 252 crore rupees.
Okay, so we're talking about like long-term lease obligations here.
You got it.
What about short-term debt? Anything to worry about on that front?
Yeah, you're exactly right about the long-term nature of those lease liabilities. And yes, there are some short-term obligations as well. Their standalone balance sheet shows 0.75 crore rupees classified as current lease liabilities.
Interesting. So they do have some short-term debt to manage too. Do we have any insights into their overall borrowing strategy or how they're approaching, debt management?
Unfortunately, these specific reports don't really go into detail about, their overall debt management strategy.
Okay.
To get a more complete picture of their approach to debt financing and risk management, we'd probably need to look at like their annual reports
Right, right.
or other financial disclosures.
Okay, fair enough.
Hmm,
It's always good to acknowledge what we don't know.
exactly.
But let's circle back to the information we do have. Are there any other like interesting tidbits hidden in these financials that you think are worth highlighting?
Let me see. Well, something that caught my eye was the client's funds entry on the standalone balance sheet.
Okay.
As of September 30, 2024, they had about 2,268 crore rupees classified as clients' funds,
Okay.
which is, noticeably lower than the 2,898 crore rupees reported at the end of the previous fiscal year.
Clients funds. Can you remind us what that actually means?
Sure. So clients' funds usually represent money that Ircon is holding on behalf of their clients,
Okay.
likely for, projects that are currently in progress.
Got it.
So it's important to note that this isn't Ircon's own money,
Right.
but they're responsible for managing it and accounting for it properly.
Okay, that makes sense. So could this decrease in clients funds potentially mean that they've completed some projects and dispersed those funds, or is there another explanation?
Yeah, that's certainly a possibility. When projects are finished, those funds would typically be released back to the clients.
Right.
However, it could also mean that they've, started new projects and have drawn down on those funds to cover those project expenses.
Right. Right.
Without more context, it's tough to say for sure.
Yeah, got it. Always more to explore. Okay, so we've talked about revenue, profitability, that order book, debt, and now these kind of interesting details from the balance sheet.
Yeah.
What about their cash flow? That's often a good indicator of a company's, overall financial health, wouldn't you say?
Oh, absolutely. Cash flow is, it's often called the lifeblood of a business.
Mm-hmm.
And looking at Ircon's cash flow statement, it provides some really interesting insights.
Okay, like what?
Well, on a standalone basis, they reported a net decrease in cash and cash equivalents of 625 crore rupees for the 6 months ending September 30, 2024. And that's, quite a difference compared to a net increase of 339 crore rupees during the same period last year.
So their cash position has actually, like, weakened over the past year.
It has, yeah.
Not exactly what you want to see.
Not ideal, no.
What are the primary drivers behind this change?
Well, if we break it down, their operating activities generated a negative cash flow of 557 crore rupees for the first half of FY25.
Okay, so they're spending more on their, day-to-day operations than they're bringing in from those core business activities. Is that a sign of trouble?
It's not necessarily a sign of imminent trouble,
Okay.
but it's definitely something to, to keep an eye on.
Okay.
It suggests that they might be having some challenges in converting their revenue into actual cash.
Right.
And this could be due to a bunch of different things. Maybe project costs are exceeding the pace of revenue recognition, or maybe there are increases in, working capital needs, or maybe even delays in collecting payments from clients. These are all possibilities we'd need to investigate further.
Makes sense. What about their investing activities? Are they making any big investments that could be contributing to this cash flow situation?
Yeah, so their investing activities show a net cash outflow of 1,080 crore rupees for the first 6 months of FY25.
Okay.
This includes, substantial investments in property, plant, and equipment.
Right. which makes sense considering their line of work.
Exactly. They're also investing in subsidiaries and joint ventures, which, points to a growth strategy. But interestingly, they've also had a significant outflow related to the purchase of mutual funds.
Hmm. Mutual funds. That's an interesting detail. I wonder what their strategy is there.
Yeah, hard to say without more information.
But overall, it seems like they're investing for growth, which is good in the long run, but it's putting a bit of a strain on their cash flow in the short term. What about financing activities? Are they raising capital, paying down debt? What's happening there?
So their financing activities actually generated a positive cash flow of 113 crore rupees during that first half of FY25.
Okay.
This was mainly driven by the repayment of borrowings, which is a good sign.
Right.
However, that positive cash flow was partially offset by payments for those lease liabilities we talked about earlier,
Right.
as well as, dividend payouts to shareholders.
Okay, so they're managing their debt, rewarding their shareholders, but not at the expense of, investing in their future growth. It's
Mhm.
it's pretty cool to see how all these different pieces of the financial puzzle, fit together.
It really is. The cash flow statement paints this really dynamic picture of, how money is moving through the business and how effectively management is generating and using those precious cash resources.
Yeah, and while that cash flow picture for the first 6 months might seem a little bit, concerning at first glance, we have to remember that these infrastructure projects often take years to complete. So the timing of, revenue recognition and those cash inflows, they might not always be perfectly in sync.
That's a crucial point. We need to consider the entire project life cycle
Right.
and not get too hung up on those short-term fluctuations in cash flow.
Right.
However, it's definitely something for investors to watch carefully,
Yeah.
especially in light of, those profitability challenges we talked about earlier.
All right, so we've covered a lot of ground here, sifting through all these
I
financials,
have.
uncovering some interesting details. What are your overall impressions of Ircon's financial performance in Q2 FY25? Are they on the right track, or do they need to, make some adjustments?
Yeah, here's where things get really interesting. It's clear that Arcon is facing some headwinds, particularly when it comes to profitability. Those year-on-year declines in both the consolidated and standalone results, they're pretty significant. And that drop in the standalone core EBITDA margin, that's particularly noteworthy. It really raises some questions about, potential internal challenges that need to be addressed.
Yeah, I agree. It seems like they're really grappling with maintaining their profitability in the face of, these rising costs
Right.
and this rapidly evolving competitive landscape. But on the flip side, their order book is incredibly strong,
It is.
suggesting, a healthy pipeline of future projects.
Yeah.
That's got to count for something, right?
Oh, absolutely. Their success in securing new contracts, especially through competitive bidding, really demonstrates their expertise and their ability to win in a more open market. But the real question is, can they convert this robust order book into profitable growth? That's the key challenge here.
That is the million-dollar question, isn't it? What should investors be paying attention to, as we move into the next quarter and beyond? What are the key indicators to watch?
I think it's crucial to track their progress on those key projects.
Mhm.
Are they meeting deadlines? Are they staying within budget?
Right, right.
Are they managing costs effectively? And are they able to maintain or even improve those profit margins? Execution is everything in this business.
So it's not just about winning the contracts. It's about, actually delivering on those promises.
Exactly. Investors should also pay close attention to any commentary from management
Right.
about their strategy for tackling these profitability challenges. Do
Mhm.
they have concrete plans to control costs, enhance operational efficiency, or maybe even adjust their bidding strategy to prioritize more profitable projects?
Yeah, actions speak louder than words.
Exactly.
So we're looking for a combination of concrete actions and clear communication for
Yeah,
management.
absolutely.
They need to show that they understand the situation
Right,
and have a well-defined plan for navigating these challenges.
right.
Transparency is key.
Couldn't agree more. And of course, we can't forget about that broader economic context.
Right.
How are factors like like inflation, interest rates, and government policies likely to impact the infrastructure sector
Right.
and Ircon's business specifically.
Right, right.
These are all, crucial considerations for investors.
It's a complex equation with a lot of moving parts.
It is.
But this deep dive has given us a much clearer understanding of Ircon's current position
Absolutely.
and the key factors that'll shape their future.
We've transformed a stack of, potentially dry financial reports into a really nuanced understanding of Ircon's, strength, weaknesses, and the challenges and opportunities that lie ahead. But it's important to remember that this is just, a snapshot in time. The business landscape is always changing.
Right.
And it's essential to stay informed
Yeah.
and adapt our understanding as new information comes out.
Well said.
Huh.
We've only just scratched the surface here. Now let's move on to the final part of our deep dive and wrap things up with some key takeaways and a thought-provoking question for you to consider.
Okay, so we're back for the final stretch of our deep dive into Ircon International. It's been quite a journey, sifting through all their financials, and we've uncovered some really interesting insights, I think, along the way. So as we kind of piece it all together, what are the key takeaways you think our listeners should walk away with? I think the main takeaway here is that, Ircon's at a bit of a crossroads.
Okay.
They've got that really strong foundation in the Indian infrastructure sector, particularly in railways.
Right.
And they've definitely shown that they can win new contracts, even when they have to compete, in those bidding situations.
Right.
But, now they really need to prove that they can, they can take that strong order book and turn it into actual profitable growth.
Yeah, you're absolutely right. It's one thing to win those projects, but it's another thing entirely to actually execute them efficiently, effectively.
Exactly. And that means, managing those costs, mitigating risks, and really adapting to that, that ever-changing environment of the industry. We talked about the closure of IRSDC earlier.
Right.
And that really, I think, highlights the need for Ircon to be agile and to adjust their strategies, as these things shift and change.
It's a good reminder that even those well-established companies can't just sit back and rest on their laurels.
Oh, absolutely not.
They need to constantly innovate and evolve
Yeah.
to stay competitive.
Exactly. And for investors, this means really taking a close look at Ircon's management team.
Okay.
And their plans for, tackling these challenges. Do they have a clear vision for the future? And are they taking the right steps to improve profitability and, ultimately deliver that long-term value to their shareholders?
Yeah, it's about looking beyond just, those top-line numbers.
Absolutely.
And really understanding, what's driving the business. It's so much more to it than just, revenue and profit.
I think this deep dive has given you the tools and the knowledge to do just that. You're now equipped to really analyze Ircon's performance with a more critical and informed eye.
Now, before we wrap things up, I always like to leave our listener with something to think about, a thought-provoking question, to kind of keep the wheels turning. You got anything good for us today?
Okay, how about this? Given Ircon's shift towards those hybrid annuity model projects,
Okay.
The HAM projects, how might that impact their long-term risk profile and profitability compared to those more traditional EPC contracts that they've relied on in the past?
Ooh, that's an excellent question. It really gets at how Ircon is kind of changing their business model
Exactly.
and what that might mean for their performance in the future.
Exactly. It's definitely something worth looking into as you follow Ircon's journey.
Well, on that note, I think we've reached the end of our deep dive into Ircon International.
We have.
We hope you've enjoyed this this exploration. Found it insightful, informative. It's been a pleasure, sharing these thoughts with you.
And remember, knowledge is most powerful when it's shared, when it's discussed. So, share your own thoughts and questions about Ircon's performance and keep exploring that fascinating world of infrastructure development. There's always something new to learn.
Thanks for joining us on this deep dive. Until next time, keep learning, keep exploring, and keep those insightful questions coming.